This video is just going to cover what chart patterns are and just a basic idea of it. So these chart patterns, they take up several candlesticks to develop. So it's not just one candlestick. Some people look for them and they can't see them because they expect it to develop very quickly, depending on what time frame you're looking at. So just to give you an idea, if I was actually considering to look at a chart pattern on a 4-hour standpoint, then it may take a day or two. Okay, so this is a chart pattern right here. And you can see that there was a double top, meaning that the market came up to a certain support resistance level and got rejected and went the opposite direction. But I want to kind of show you like a head and shoulder pattern being developed and how to trade it in action. Okay, so you can see that one thing you're looking for in a head and shoulder pattern is a shoulder, a resistance level that gets rejected. Then you're looking for a higher high of the swing point, indication that this market has trended upwards. Then what you're looking for is a lower high. So this next area needs to be a little bit lower than this high. Okay, typically it will be either equal to this shoulder or just slightly lower than this high. Okay, once you see this candlestick right here, there's different ways to approach it. Number one, if the chart pattern is the shoulder is equal to here, depending on what kind of candlestick you're up against, then you can enter based on the reversal candlestick. Or you look at this candlestick right here as your entry point, or even this close of the candle, then you're having your stop loss above the shoulder area. So this is one stop loss rule is above the shoulder area. You can also look at an entry point. If you see this a little bit later, you're looking for a break and a close beyond this called neckline. Now what a neckline is where there's a shoulder, a head, and shoulder, and this is the neck. It's basically a support and resistance level that has been broken and closed beyond. Okay, so once it closes beyond that price, that would be your entry point. Again, your stop loss above here. Your take profit rules, again, would be previous support resistance. In this case, this would be too close to give you good risk reward. So we're going to target this support resistance level to give you good risk reward ratio. Okay, so we had a way to approach it based on the break. That'd be one way to approach it. We could look for reversal candlestick patterns, but our stop loss again would be above here if we were to use those rules. If you were to approach this market where you approach it with a trendline break, then you can look at an retest perspective where you have a closing candle against that area and again finding a wick high. Okay, looking at this wick high. See there's a closing price right here, stop loss above here, and then take profit at the support resistance level. So it's just like a trendline break or support resistance break. You can either look at the breakout, the retest, and the reversal candlestick patterns based on the retest or even the shoulder area for your stop loss and take profit rules. So if you decide to trade it right here, your stop loss would be up here. If you decide to trade on the retest, then again your stop loss would be in this area here, finding some downward pressure or even a confirmation candle showing that we have closing candlesticks going against that area like this to target support resistance as our overall target. There's different market conditions that you can attempt these chart patterns. Again, you can look for consolidations, or in this case scenario, we're looking for a triangle formation. Okay, they're also known as pendant. So it's basically two trend lines, one going up, one going down, and a breakout, either or. You can look for the break or some kind of candlestick pattern to indicate a direction. So here we have some smaller candlesticks, so you can enter the market based on the break of this trend line. Your stop loss rules could be behind the trend line or behind this previous low here. If it broke down, then again this stop loss would be right around here. You can also look for the retest. In this case now here's your retest of your trend line and trading upwards. So you can have a stop loss behind there. But your take profit rule would be back up to the previous support resistance levels and giving you a good risk reward. Okay, so this trade right here with this retest, you may have got stopped out with that trade. But the idea is that, again, you want to look for the retest. To retest the trend line twice, you can look for the previous close above this area here. Take profit at this area here. So this is a pendant formation that you may look for those trading opportunities. This is the pound dollar, and I'm just going to show you another pattern, a double top situation. Now this is a bigger double top. We have this as a top and this as a top again. Okay, so there's a bigger, more like an M-shaped formation. Or you can look more of a temporal perspective. As you can see, we have a market come up here, and the market rejecting that price area here as your entry point, stop loss above here, and looking at previous support resistance as your target area. Good risk to reward. Now with this formation here, you can also look for the breakout. Here's your neckline area. Here's your entry point, your stop loss above here. Take profit at previous support resistance. Let's look at some of these other currency pairs. Like this is the Aussie dollar. So with this formation, we can see if we anticipate that this is the bottom, okay, and then we can see that reversing, then we can take an opportunity for the double bottom situation. Either we can look for the touch of the area, the engulfing pattern or closing pattern against it, depending on what kind of candlestick pattern that we're up against. Stop loss behind that wick low or in this area if we don't have any wicks, and trading back up to support resistance. Okay. Also, you can look at more of these opportunities. They can come in different shapes and sizes. So we can see there's a little M shape right here. So if it's a smaller pattern, then you can anticipate the trade to not last as long, as well as smaller stop losses and take profits. So we have an M shape. We can either take it on the top here, the break of the neckline, closing candle, trading back down to support. But looking at this pattern here, we can take it at the touch of the line, engulfing pattern, or any reversal candlestick patterns here at support. We can either take it there, or we can take it at the break of this neckline, closing candle. Again, take profit points is at the previous support resistance level. Stop loss, if you took it on the break of this neckline, then your stop loss will be behind this candlestick. If you were to take it at the touch or engulfing pattern of the support level, then your stop loss would be beyond this area here. So those are some simple trading methodologies as well as chart patterns. Double tops, just support and resistance on the top. Double bottoms is support on the bottom. And these wedges or triangles are just using trend lines. And you're just looking for the breakout, the touch of the line, just like we've shown in the other videos. And I hope this helps you with showing you how to identify these chart patterns. Thank you very much.